Hey, let's go to PC Team. In this video, I'm going to go over what the volume weighted average price is, or the VWAP. It's my second favorite indicator, I'll call it. I do use this on the daily. So how do I use this? How did people calculate the VWAP? And all that and more, coming right up. What is the volume weighted average price, or VWAP? Now, we're not going to go over how to calculate it. I'm just going to show you, or I'm going to show you how it's calculated. I'm just not going to show you the actual equation. If you guys want to nerd out and look at the equation, it's a pretty lengthy one. Go for it. So the volume weighted average price is, in my opinion, my second favorite indicator. I personally use the EMAs more. I know some traders would want to slap me on the side of the head for saying that, but that's just my opinion. Now let me go get my eraser real quick. We had some more guys joining in here. So why is the volume weighted average price such a great indicator? It's simple. It's because so many traders use this indicator. Okay. That's why it works so well. First of all, it was mainly for more hedge fund style stuff, and then it became more adopted by the retail trader. But there was a trader. Actually, I think Russ Cameron said the reason why so many people use it is because it's the same reason why so many people use stoplights and why stoplights are effective. It's because everyone understands them, everyone uses them. Same exact thing for being or for using the VWAP, and why it's so effective when a stock breaks a VWAP, or when a stock holds a VWAP for support, is because so many traders are using it and buying it. So if you have some outlandish indicator, the whole reason why it more than likely won't work as well is because not a ton of traders are using that indicator. It's just simple. Why is the 1 minute in the 5 minute time frame so good? It's because so many traders use the 1 minute and the 5 minute time frame, and they can identify setups in that. No one's using the 6 minute time frame. No one's using the 7 minute time frame. It's you want to use things that more people use so that you can understand what people are looking at. Now, the exponential moving average, we talked about last group lesson. Say a stock does this, okay, and then boom, boom. It would look something. It would look something like that, and then it would start to curl off and do something like this, and then like that. Okay, so this is the EMA, and simply the EMA is calculating the last, several minutes or several candles of data and trying to find the average of all of these to create this line. Okay, that's all it's doing. Now the EMA, like we talked about, it does weigh more heavily on more recent data, which is why I like using the EMA over the SMA when it comes to day trading. Okay, but all it's doing is it's trying to find the average of this price and the weighted average of the price, and it creates this line. That's all it does. Okay, and that's why it's super simple. It's effective, but it only factors in the weighted average price. Okay, so VWAP, we're missing one key letter, the volume. So why is volume so important? Well, for example, if how do I want to say this? Say at $10 a share, there's 250,000 shares of volume, 250K shares of volume. Okay, $1 share, 250,000 shares of volume at $10 a share. But then the stock gap's higher, and next thing you know, the stock is at $20 a share. But the stock now has 2.5 million shares of volume. Wouldn't you expect that the volume or the weighted average price should probably weigh more on $20 than $10? It's got 10 times the amount of volume here, a 10x volume increase from $10 to $20. But the EMA does not calculate this. The EMA does not calculate any of that. It's strictly just the volume weighted average price, or sorry, it's just strictly the weighted average price, and volume has nothing to do with the EMA. the EMA will create a solid line, even if it's got 100,000 shares of volume on the day. Now, why do traders like using the VWAP? Well, let me just draw a chart real quick. Let me just draw. Usually my VWAP looks like this, and it'll start to like level out a little bit. So the reason why so many traders like using the VWAP is it gives you the average of what the volume is being traded in on the stock. For example, the stock gaps higher, volume is increasing, right? That's the stock that's gapping higher. Now, the real reason why a lot of traders like using the VWAP is they like to see the distance between this VWAP and what the stock price is at. Now, if you guys used Thinkorswim, you'll also know that they use a top VWAP and a bottom VWAP to show overbought and oversold levels. Now, I don't use these when it comes to momentum trading because oftentimes, especially during parabolic movement, I mean, this stock is just so much higher than the top and bottom VWAP lines. I only use the middle one, and it's the most effective anyway. So, but what it's doing is it's trying to show you that this stock is overbought or oversold, not so much based on the price, but based on the volume. For example, if the stock starts gapping higher and you see the volume and average price do this, one thing is it's gapping higher off of a little bit lighter volume because all it's doing is it's taking the average volume right here. And if it starts to level out and the stock continues to gap way higher, you'll know that there was more volume in this area. Now, this is why the volume weighted average price, or VWAP, you guys should do a VWAP counter, how many times I say VWAP, is such a good support line. Because if it comes back down to reality, back down where the normal volume should be, you often see this. It just consolidates over it, and then it'll either continue higher, or if it breaks below it, it's usually a solid short opportunity. Same thing with if a stock moves higher, then falls below it, and later it's consolidating below VWAP, and then it starts to go higher. What that's telling you is there was more volume traded above VWAP, which shows more traders like trading it in that area. It also shows there's a lot of potential bag holders in this area. If the VWAP's way up here, there's a lot of volume trading up here. Now, obviously, you can see the volume bars on the bottom of your chart, but VWAP really makes it super simple for you. Now, what I'm going to do is I'm going to show you some real life examples to explain VWAP even more. Does anyone have any questions? Throw it in the Zoom chat if you have any questions about VWAP, or if you don't understand it, I'll go over it completely over again. Stops. Okay, I'm going to add VWAP here. VWAP. I do not use the upper or lower band. As you can see, I've done this 100 times, so I know where everything is. Okay, so this is very common after hours and pre-market. You can see VWAP kind of lags behind. On average, the volume or the EMA, the exponential moving average, moves a little bit quicker than the VWAP, especially at pre-market and post-market. So, for example, you can see that this was a pretty good move. Tops was actually gaining volume. If you see the volume bars here, it was actually gaining volume as it continued higher. Okay, that goes to show that that's a good move. It's going to be consistently. Honestly, if it is consistently gaining volume, that's a really good sign that the stock is going to increase and continue higher without faking out. And then you see what happened? It consolidated. Okay. It broke through VWAP, had a solid move to the upside, but it had this fake out. Why do you think it had this fake out? Well, if you look at the volume weighted average price, it's back down to 180. It's very far away from the VWAP. Now, all the VWAP is it acts as a solid support line. And the further away you buy off of the VWAP, say the VWAP's at 180 and you buy at 220, there's a higher chance of this stock pulling on back and you getting stuck in a corrective move to the downside because the VWAP is so much further below it, because there's less volume being traded in that area. So one big sell order can really throw off the stock or continue or can completely destroy the stock's movement. Okay. Now, we're saying that again, the further away you buy the stock off of said VWAP, the generally the riskier it's going to get. When you are trading a stock, you want to see this move. You want to see it consistently continue up, just like an EMA would. I mean, the VWAP and EMA are neck and neck right here because volume is steadily increasing. That's a really good sign. Okay. When it doesn't steadily increase in flat lines, this is where we can get stuck in the chop. Okay. It'll move to the upside, have a nice little volume spike. EMA will barely move. But because the average volume was at 180, you buy it for the break of $2 and you get stuck in a fake out and you're wondering why. Well, look at the volume weighted average price. It wasn't steadily increasing volume. It was a big volume spike. Usually if you get a volume spike like that, odds are this is what's going to happen. Okay. This is widely probably the most used indicator in trading. And as you can see, it kind of flatlined there, and when it broke below VWAP and it couldn't hold VWAP anymore, generally you'll see a retest on VWAP, but this one didn't retest right here. It broke below VWAP and just continued trading lower. Now, looking at pre-market, it didn't move nearly as much because look at the volume, not much volume. Okay, but check this out. So much volume was traded right at open. You often see even the VWAP might even move faster than the EMA at open because so much volume is being traded. Well, 2 minutes before market opens, Tops announces a secondary offering. Okay, it continues much lower. It's trading in so much volume, the VWAP actually reacts quicker than the EMA because of how much volume is being traded. And you got to think the EMA is calculating all of this past trading data as well. Volume weighted average price says, okay, I'm going to show you exactly how much volume is being traded in the stock, and it's actually moving quicker than the price. That's crazy. You don't see that often. Now, what happens is, if this ever happens, you find that the VWAP, the VWAP oftentimes acts as a good resistance line. It struggles to get back above it. I'm trying to think of the stocks I was trading today that had a similar setup like that. Guys, what was that dead cat bounce stock that we were trying to trade today? Did you remember? I think that would be a good example. I can't remember for the life of me. Oh well, does it? I guess it doesn't really matter. GTHX. Was it? I think it was. You're right here. Yes, it was. Yeah, it's not as good of a setup as I thought. But man, I can't find a picture perfect setup. Lately, I haven't found one that I've wanted to use. But I think the Tops reference is a great reference. How far away it is from the VWAP, the riskier the buy is, especially if it's consolidated for a long while and then starts to break out. A lot of you guys think like, man, I keep getting faked out at around 12 noon. Well, there's a reason why I used to quit trading past 10 a.m. sharp for the last few years, because it's very common for stocks to consolidate, spike in volume because it breaks VWAP, and then get rejected and go lower. Okay, this is if the VWAP is closer to the price. I'll say this: if the VWAP is closer to the stock price or the stock candlestick, the less risky it is to trade it. As you can see, as the stock started to climb, these were solid trades. There was not really any fake outs. But then when the VWAP started to consolidate and level out right here, look what happened. It got so far away from VWAP, it ended up correcting all the way back down, even below it. Okay, so that's how I use it. That's why I like it, because it's easier to use than trying to calculate these volume bars. Does anyone have any questions on VWAP? VWAP's a hard one to explain. I tried my best to explain it. If I didn't, I will completely redo this lesson and think of another way to explain it. But think of it as a really solid support line, and the further away it gets from that support line, the more likely it is to snap back or it is to reverse. If it's above VWAP, it's a very bullish indicator. If it's below VWAP, it's a pretty bearish indicator. Does anyone have any questions? That do not hesitate to ask, guys. I know, I'm not the world's best teacher. I try to explain it as best I could. But this one's a really tough topic, a really hard one to try to explain. EMA, fairly easy. When you start throwing in, volume in the mix, it can get a little sticky.